Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tiggre. My guest today, or my victim, if you will, is Claude Lemasson. He's the CEO and president of Eastmain Resources. Readers of my work in the past know that I've written about this company before. I've followed it for some time, and I have questions. But before we get into those, why don't you tell us a little bit, give us the short version, the elevator speech, if you will. Tell us about what your company's working on, and then we'll get into my questions.
Well, thank you very much for having us today. So Eastmain Resources is focused on high-grade gold in James Bay, Quebec. We essentially have two key properties that we are focused on. And on one of them, we actually have an anchor project called Eau Claire and also a new discovery called Percival. And on the other one is the Eleanor South joint venture, that we are also advancing with a new discovery from about a year and a half ago, and that's a joint venture with Goldcorp and a small company called Azimuth.
Okay, well that was the quick elevator speech. Well, let's dive right in. So the people who followed this story for a while or who've read my past writing, remember when we first got into this, Eastmain was famous for the Eau Claire deposit, which at the time was one of the highest grade, large open pit projects in the world, really. It was in a class that you could count on one hand, the kind of deposits like that. It has since then changed a lot, and you've come out with, done a lot of drilling, you've come out with, I think, more credible numbers, but they're very different. Can you talk to us about that change? Is that bigger open pit, high grade scenario ever coming back, or is really the upside all going to be underground at depth? Or talk to us about that story. It has changed, convince me that it's for the better.
No, absolutely. And you're absolutely right that it has changed. I got involved with the company about 3 years ago as an independent director. About 2.5 years ago, we needed to make a change in management. And because there had been some issues with the Eau Claire deposit and the expectations and the perception of what really was happening there. When I took over, we had about 200,000 meters drilled in the deposit. Our initial technical assessment of that was simply not enough for a narrow vein on echelon deposit to really establish a real resource. So what we did is we proceeded over the next year and a half or so to drill roughly another 100,000 meters. So we finished with about 300,000 meters, much closer spacing. Again, narrow vein on echelon, needed tighter spacing to better understand it. Once we did that, what we realized is that the deposit goes from surface. So you talked about a big open pit. It goes from surface, but it does go down to 860 meters deep, and it's still open at depth. So the source of the deposit deep in the ground comes all the way to the surface. The problem was that looking at simply an open pit, you would have captured a portion of the deposit on surface. Part of the issue on this massive open pit, because it's high-grade veins is what we have, was that the strip ratio was near 29-1. And that was a massive issue from an economic perspective. Okay, so there was a misconception on how to mine this deposit, and that was unfortunate. So we took it as a complete first principles review, where we said, let's look at the mineralization that we have. It goes at surface, but goes deep in the ground. They are on echelon veins, fine. So from that perspective, how are we going to mine the top part of the mine? And then we need to go underground eventually and mine the rest. We did that analysis. We brought the strip ratio from 29-1 to 9-1. High grade pit still, but much smaller. I agree. We reduced the pit to what we consider a manageable size. So what we have is a 3.8 gram pit, which is very, very high grade, okay? But contains about 20% of the mineable ounces, so about 200,000 ounces. And then the rest, you have to ramp underground and follow those veins and mine them out. That's another 800,000 ounces. So we have 1 million ounces, 20% it hit high grade and the balance underground, 80% underground. And that's the reality of the mineralization.
All right, so let me jump in just to be clear on the history, and then we can move on from the history. I know you don't want to talk about history the whole time, but just to be clear, you've been very polite. You haven't thrown anybody under the bus. But it's not that they modeled this as some sort of disseminated thing and we're just making it up. It's just that they were, counting all these ounces without looking at the economics and what was actually mineable. Is that what I'm getting from what you're saying?
That was our assessment, yes.
Your assessment. Very good. Okay. So flash forward to more recent times, and you have a deposit that's these narrow structures. Part of it's open pittable, the bulk of it's underground mineable, and you've already done a preliminary assessment of this, which returns some pretty good numbers, which is now based on a lot of drilling. Can you walk us through the PEA quickly?
Yeah, no, absolutely. So when we completed the PEA, which is in May 2018, so about 8 months ago, after doing a new resource estimate, which was more conservative, the PEA came out to be very robust, and that was obviously our intent. When we're talking about after-tax numbers, the net present value, the NPV at a 5% discount, is $260 million. The IRR after tax is 27%. The payback is 3.1 years. And we're looking at all-in sustaining cost of US $574 an ounce, which is less than half of the current gold price. All of these numbers have been run at $1,250 gold. So we use what we consider fairly conservative parameters, but brought reality into this deposit, and now we know what we have. So we're looking at producing about 1,500 tons per day over a total period of about 12 years, 3 years in the open pit, 8 years underground, overlapping each other a little bit. And we're looking at producing, in the first 10 years of full production, about 86,000 ounces a year. We believe with further studies and a bit more drilling, we'll be able to increase that number to probably about 100,000 ounces a year or so. And that's really our objective ultimately. This is not meant to be a big mass-producing mine, but it is a high-grade gold mine that is highly profitable.
I wanted to ask you about that. So, I mean, this is a preliminary economic assessment. Is it only preliminary because so many of the resources are inferred, or is it, because, sometimes, what the exchange lets you call preliminary versus pre-feasibility versus feasibility, isn't due to the size of the thing. But the other scenario, though, is, as opposed to the regulators, is you're still exploring. It could still be much larger, and so it's preliminary because we really have no idea how big this thing is yet. Where do you fall in that?
Yeah, so right in between, and I'll explain exactly what we're thinking. First of all, the total resource, okay, the resource estimate calls for 1.35 million ounces, all in, all categories, okay, 1.35. Out of that, the PEA shows that we have 1 million ounces mineable, okay, that's key. So 1 million ounces is mineable out of the deposit, which is a pretty good conversion. Then from the 1 million ounces mineable, we have 700,000, so 70% is in the measured indicated category already, okay? So we only have 300,000 ounces, or 30% of the mineable, that is in the inferred, that will need to be drilled before we go to the pre-fees or fees, need to be drilled to be included in the pre-fees or fees. So it's a question of doing more drilling ultimately, not only to convert the inferred into M&I, but also to expand the deposit so we could make this bigger. And as I mentioned, we have room at depth, particularly the top 600 meters of the deposit is very well drilled. Between 600 and 900 meters, we have mineralization that's already identified. We just don't have the drill holes. If I was to drill that, I potentially could add 300,000, 400,000, 500,000 ounces, and that's not with going deeper. That's just within the total plan that we have. Under 860 meters, we have no drill holes, and we're still open at depth. So we could drill deeper eventually and grow this, but then you're adding to the mine life, in the long term, as opposed to short-term benefits.
Well, and drilling that from surface would be hideously expensive.
Correct.
So better,
So,
you know,
so
if you have a profitable mine with, you know, down to the depths that you're reaching now, I think investors can say, and it's open, rather than spend the money now.
that is exactly our strategy, is just to say what we have is 10 years of mine life minimum, very profitable. Someone, when they develop this mine and they're mining, will eventually drill below and will expand the mine, and this may be a 20 or 30-year mine life down the road. No need to drill it today to show that. We have already what we need to proceed. And you know, another part of being a PEA is it is the first study on this project issued. We need to do more technical work, and we're currently doing that. We're contemplating potentially doing an exploration ramp and a bulk sample. That's currently being studied, and doing engineering and permitting on that to be able to make that decision down the road. That would be very beneficial. Many companies have done it, like Hard Gold, Integra, Dalradian, putting an exploration ramp, doing a bulk sample, improving even your economics, and then proceeding with a pre-fees or a fees. So that's all in the cards in the future.
Okay. I wanted to ask you about the open pit versus underground scenarios that you have. The open pit makes perfect sense to me. It's smaller, but still very high grade. I can see where that carries the reduced strip ratio. It works. You know, ideally you could find more near surface and add to that. We can come back to Percival, but the underground grades at 6+ grams per ton, you know, it's not low grade, but it's not, you know, pretium grades or other high grade stories that are out there at 6 grams. Do you have, you know, unusually consistent ore zones or particularly thick ore zones, or what makes that 6 grams work? Like I was a little surprised, honestly, to see the 27% IRR with so much of the mining to be underground at 6 grams. Can you address that?
Yeah, sure. The veins that we have, as I mentioned, the veins are en echelon. The veins that we have may vary anywhere from loosely from, you know, 0.5 meter to 5 meters wide, depending where on average they're 2.5 to 3 meters wide. So pretty decent vein. They are, because of the tight spacing we've done, they are continuous. And what we're able to do is when we look at the veins in our model, we're able to say that vein would be a nice, very nice long hole panel. And what we're looking at for the mining method is doing long hole. So the only difference between regular long hole, which is about 10% of what we're going to do, because the veins fit well for that, is we're doing captive long hole. The big difference between captive is fairly simple, actually. Normally, the length of your drill hole, therefore your panel, is 25 meters or so. On regular long hole, what we're doing is we're putting another level, a captive level, in between the two ends. And that means that at 12.5 meter, you're putting one hole in, and then from your captive level, you're doing another 12.5 meter. What that allows you to do is orient your drill hole down dip of the vein more precisely to keep your dilution reasonable. The cost of doing the captive is not significant compared to the savings of reducing your dilution. Therefore, it's a mining method that works very well in our case. 90% of our method is that, and our en echelon veins actually are a nice fit for that type of mining method.
Okay, I hear you. So you have a little bit more development costs, but in exchange for that, you get much better grade control.
Exactly. Better grade control, obviously less dilution, less cost of the mill, ultimately on, and it multiplies itself through the deposit. And our, you know, our veins are high grade, and we're including some of that dilution. And by the way, through the PEA, some of our veins are, you know, say 0.5 meter to 1 meter. We put a minimum width of 2 meters on everything. So if I have a 0.5 meter vein, we're mining it at 2 meters. I'm diluting it extensively. So that vein has to be pretty high grade while we have those. And so they end up being 2 meters minimum width. Some of the panels are larger than that, 3-4 meters wide. But the smallest one is 2 meters wide. That means I've got a vein in there that I may have already diluted internally, but it carries, because of the grade, because it's high grade vein, it carries.
Right. Well, when you actually get underground, I mean, in theory, in the future, when you actually got down there, Would you just mine the model as is, or given the realities, if you see a really consistent but narrower thing, might you consider doing some jackleg there? Or if it was amenable to resuing, would you consider that?
You're absolutely right. I mean, in the early days, you pick a method, you apply it, you say this is what you've got. This is a reason why I'd love to get to a bulk sample ultimately, because then you open it up and you really look at what you got, and then you may change or adjust your mining method. And we did exactly that. At Red Lake for Goldcorp, when I ran the Red Lake mine. We wouldn't mine the veins, but all of a sudden we would hit a high-grade vein on a wall, and we completely stopped doing what we're doing and chase it. And these are the kind of things that you would do. You have to adjust your mining method according to what you have underground, and that's key. So are we going to do cut and fill here in the future, or some method? Absolutely possible. Right now at the PA level, we've got a method that we believe will work. Eventually we'll get underground and maybe adjust accordingly.
Understood. Okay, so back to the surface then. Talk to us a little bit about Percival. How far away is that? How significant is that? I've seen those press releases, and obviously there's something there, but it's not the kinds of grades or thicknesses that we associate with Eau Claire.
Sure. So it's a different beast. We are, first of all, 14 kilometers away on the same property, the Clearwater property. Eau Claire is at the west end. Essentially, Percival is at the east end, if you want, of the property. What we did last year is we regrouped completely and reevaluated 7 targets on the Clearwater property that we felt were the best exploration targets to find new mineralization to add to Eau Claire. We picked the best one of the 7, which was Percival. We decided to do some drill holes there. We committed to doing in and around 10 to 11 drill holes. The first ones we did, fantastic. At surface, meaning near surface, top 100 meters, we hit grades of 2 grams over about 80 meters on both holes, roughly, on average. That is significant mineralization, very continuous. We're very happy with that initial, obviously, hit. We followed that with 9 other holes, and what we're finding is it's a little bit structurally a little bit more complicated than we thought, if you want, including there's a fault, an 18-meter fault near the 2 drill holes, the initial drill holes. So we went and drilled on the other side of the fault. We hit some mineralization, couldn't quite connect the dots. We're still not connecting the dots, and the interpretation is early. But we did hit some, maybe higher grade, shorter intercept. The last one, for example, 5.7 grams at 11 meters, okay? That's pretty decent. So we've got a bit of a mix of lower grade, long intercept, some maybe medium to high grade, shorter intercept. But we're hitting mineralization in every hole. That's key. And we've also drilled a hole perpendicular to everything just to hit that fault, to start understanding the fault. What that tells me is we have mineralization. We're excited about the potential. This thing could be significant. We need to do more drilling to better understand it and advance it. Hence why we committed to doing 20 holes on a winter program, 5,500 meters. That program is actually, the staff is mobilizing at site as we speak. We're going to start drilling by the end of the month. We're going to have results starting in late February coming in. And I've got only 11 holes now. I'm going to have eventually 31 within 3 months. So by then, we'll have a much better understanding of what we have. We think Percival is significant. And don't forget, everything we're doing is, the top 150 to 200 meters. So this is open pit potential if we can figure out what we have and how extensive it is. And tied to that, we actually flew in December an electromagnetic survey, a VTEM, right over not only Percival, but the whole corridor, where we call the KS corridor, the Knight to Serendipity corridor. Percival is on that corridor. And we flew the VTEM. We're going to have results of that. We're going to release those within the next 2-3 weeks. And that'll also guide us to expand Percival both to the east and west and actually follow other targets that we have along that corridor that look really good, and maybe ultimately tied the whole thing together.
So the idea here is, what happened with the past at the current Eau Claire footprint, it is what it is, and you've got your scenario there. You understand that pretty well. So you're not going to expand that pit, but if there are other near-surface deposits that could be satellite feed for the central processing plant, you have a lot of targets that early stage, but potential satellites. That's what we're talking about?
That's exactly what we're talking about. And for us, it's exciting because when we, the PEA is based on 1,500 ton per day, maybe another study on Eau Claire could increase that a little bit or improve that. But assuming that we can get another 500 ton to 1,000 ton per day from a satellite pit, especially in the early years, all of a sudden your production goes much higher. You're paying yourself back much quicker, highly profitable. That is exactly the intent.
Okay, very good. Well, I have much more questions on that, but we only have so much time. So let's go ahead to Eleonore South. My first question there is, this also seems to be sort of somewhere in between. There are some narrower, higher grade intercepts, some longer bulk, but it's not like, hundreds of meters of half a gram to a gram that you associate with some big disseminated deposit. And it's not like 1 or 2 meters of, half an ounce per ton, or that you associated with a high grade narrow. What is it, and what is the hope here?
Yeah, it's it's very interesting. Eleanor South is I'm going to say honestly is still a bit of a mystery, but it's exciting because it's number one, it is massive. Like, it's a massive gold system. Every time we drill, every time we trench, every time we expose, we're hitting mineralization. You're absolutely right that there's a mix of mineralization. We do have the 40 grams at 4 meters wide. We also have the 4 grams at 40 meters wide, and then we have some half a gram to a gram of 100 to 150 meters wide. A mix of different intercepts and different widths and different grades. Now, the good news is we're hitting gold all over, and we are in an intrusive, so in a tonalite intrusive near the meta sediment. So we're like in a cap, if you want, of the intrusive, sitting near or on meta sediments. So we've got mineralization at the contact, and then we walk into the intrusive, and in the first few 100 meters, we actually have mineralization there. So what we need to do is continue to grow and explore this to better understand it. But let's not forget that we're talking about something that's wide by, say, 600-700 meters over the potential. Right now we're at about 2 kilometers long, but potential of a 5 kilometer around the edge of this cap, all the way around what we call the JT prospect, which is on a map, is on the other side, on the west side. But the bottom line, it's a 5 kilometer half circle that's potentially 600-700 meters wide, and we're talking 200 meters deep. Everything is within near surface. So the potential of that size, it could be massive. What does it require? A lot more drilling. A lot more drilling to better understand it, to grow it. Ultimately, we wanted to get to a resource. We're not nearly enough drilling and spacing to get to a resource right now, but we're getting programs approved. We're having meetings with the partners within the next week to actually approve the 2019 program, which proposes to do a lot more drilling, more stripping, more trenching, and keep on understanding and growing this thing till we reach eventually, critical mass to do a resource, which probably won't be this year, might be next year. But the other angle on this particular deposit on the joint venture, this is a joint venture with Goldcorp. Goldcorp operates the Eleanor mine, which is about 15 kilometers away or so. The Eleanor mine has capacity in their mill. They've got about, let's call it 2,000 ton per day of capacity that they will probably never fill. And there is a need for more material for that mill, and it's there, and it's built, and it's running. So anything that we can find, especially if it's near surface, which is our case, that can carry some grade, that can be mined and trucked over to the Eleanor mill, is going to be a benefit for all parties. So to be able to find, first of all, announce this discovery and grow it as a significant deposit, to then have a mill that you don't have to build nearby. That is significant. That's why we're pursuing that project, and we are the operators on that project, and we're continuing to propose bigger and bigger programs to advance that that deposit ultimately.
Okay, I'll come back to the project management. Got a question about that, but just to trying to clarify, it is a mystery. We don't know entirely what's going on, or maybe even half what's going on. But you have looked at the rocks. You know whether or not you're dealing, for example, with an epithermal system that might have only a couple hundred meters of extent versus something with deeper roots. My guess is, given where you're drilling, what part of the world, that you're dealing, whatever it is, its longest dimension is likely vertical, down. Is that correct?
We would totally agree with that. The fact that there is gold in the intrusive, which fractures itself, as it gets closer to surface, tells us that maybe part of the root or another source nearby carries more gold, might be more concentrated. And right now we're finding some of it, and we need to keep on pursuing to tie to the source, which may go deeper ultimately. Absolutely, that's going to be part of the interpretation and the thinking over time. Yeah.
Right. But meanwhile, it's definitely not an Éléonore clone. It's not like, oh, here's another one right nearby. It's something else.
No, and it's also a different setting. Éléonore is in metasediments. We're in an intrusive, so it's a different setting. But having said that, we're not at the stage, and we don't have the amount of drilling that Éléonore had when it became what it became, and multi-million ounce gold deposit. There was a lot of drilling done on that deposit. We're at the first steps of heading over there. But yes, ultimately we do think this could be massive and could be significant, and probably has deeper roots.
Okay, so in terms of the project, I'm glad to hear your operators. That certainly is good news for you. It gives you some degree of control. I know it's three-way and you have to work with your partners, but at least you're not dangling on the end of somebody else who's slow to get going. So that's good news. On the other hand, it is three-way. You have a little bit more than a third, but it's diluted ownership. If you have some success here, it's not unreasonable for the market to sort of react with 1/3 of the enthusiasm or whatever. Is there any chance of cleaning that ownership structure up, or is it is what it is until Goldcorp decides they're all in or they're all out, or what's the best outcome there?
Yeah, no, I don't disagree. It makes it a little difficult. The one thing, the way I like to think of the flip side of what you just said, which I'm doing, for example, in 2019, that project is going to be doing, let's call it a $4-point-some million program. We only have to pay a third of that to get the benefit of a full program and the data. So I'm paying 1.4 million out of 4.2 because I'm 36.7% owner, yet we get $4 million worth of data to improve this project. So the cost along the way is a lot cheaper. You're right that the reward ultimately, if we announce a resource eventually, however many ounces we're going to have, people are going to calculate and say, oh, well, you have 36.7% of those ounces. I don't disagree, but they could be very highly profitable ounces, and yet we're able to advance the project. If we were alone on this project as a junior, it would cost us almost 3 times the amount to advance it the same way. So you have to look at that side of it too. You said ultimately what happens? Well, ultimately, I think we advance the project as partners. Whether all the partners follow is a question mark, but for now, everybody is in every time we propose a program equally in their proportions. Ultimately, I mean, Goldcorp has the mine running nearby. Could this become the satellite of the mine and Goldcorp should be running it? I would think that would make sense, but we're not there yet. We don't even have a resource yet. So let's at least unlock the value before we get to that point.
Though to be fair, I mean, look back at history. Goldcorp bought Éléonore from Virginia with no resource. right?
Correct.
That was one of the most astounding things in my 15 years almost in this business now that still stands out in my mind. The drilling was so consistent, you know, every fence, boom, 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 those high grades, that Goldcorp, you know, they did their own back of the envelope and that was good enough for them.
That's correct.
I'm sure it was a pretty good envelope, you know, a big one.
Was it one of those big ones? Yeah.
Yeah. Okay. All right. So you mentioned these are your two foci for 2019, but you have your namesake Eastmain mine, which is a smaller resource but higher grade. Are you going to do anything with that? Do you monetize it, sit on it? You know, what happens there?
Yes, so we decided after 2017, and we issued a brand new 43101 resource on Eastmain mine, which had not been done before because it was a historic resource, and we made it a 43101. We issued, and you know, 375,000 ounces or so for small resource, higher grade in the 8 to 9 gram range. But the issue is that Eastmain mine requires a lot more exploration to grow, to get to a critical mass as a mine, as a standalone mine. And because of our priorities in the company and because the market has been tough and we're trying to be careful where we're spending our money, we decided to put it on hold in 2018, which we have. And 2019, the market hasn't improved much up to now. We hope it's going to improve, but it hasn't yet. So we've also said we're not going to commit dollars there until maybe 2020 at this point. We still believe in that project. We're pretty excited about its potential. Meanwhile, yeah, there's possibilities that maybe another company might be interested, another junior, or even maybe a junior or mid-sized producer might be interested in looking at it, spending some dollars on it. We're certainly open to doing a partnership on that, joint venturing it, doing an earn-in. There's no real limit as to what we're open to do there. It is our third priority as a project. So if someone was to come in and give us a reasonable proposal to advance it, we'd certainly gladly consider it. But for now, as far as our company and us running a program on that, I've put that on hold until further notice.
Okay, so just to be clear, mineralization is still open. It's not that you ran out and it's done and it is what it is, this small but high grade thing. It's simply not your top priority and you have to make budgetary decisions. Is that correct?
That's absolutely correct.
Okay, fair enough. All right, so speaking of budgetary considerations, your presentation says as of the end of last year you had 4.4 million in the bank. You know, roughly half is flow through, needs to go into the ground. But you've got big projects here. Is that enough to get you through 2019, or do you have to go back to the trough and raise more money this year? You know.
Yes. So I'm going to say we're finishing the year fairly comfortably as far as where we're at, and being able to announce our winter programs, meaning the first half of the year. We are proceeding with those on the two key projects, plus Eau Claire, we're doing some of the technical studies. So on 3 fronts. We are reasonably well funded to execute on that first part of the year. There is no question that the budget for the total year is greater than what we have in the bank, and therefore eventually we will have to consider returning to the market. Obviously, we always watch what the market is doing. We also watch whether there's windows open for financing, on and on, whether we're advancing our project and issuing results, all of these things combined. Yeah, there's no question that if I want to execute, particularly on the second half of this year, with similar programs.
Well, if you're going to do the bulk sample, you're going to need a lot more money to do that.
That would be a separate consideration completely. But even to continue advancing, because we're doing winter programs, they're typically a little smaller. If we do a summer-fall program on both projects, which would be a bit larger, we're going to need to raise money to execute on H2 of this year. H1, I think we're good, we're comfortable, and we're doing what we're doing. Eventually, definitely need to go back to the market and raise more money down the road.
So clearly the ideal is the results that you'll get from the H1 work will justify a higher share price to be able to finance on better terms.
That That's ideally what should happen. It often doesn't, especially not in the last 2 years.
Yes, I understand. Well, I'm a bull for 2019, so I'll give you that. But let me ask the more obnoxious question. You've already got 222 million shares issued and outstanding. You're currently trading less than 20 cents. Does that make it difficult to raise money if you had to at these levels? Is there consideration of a rollback, or you just sock it out and you know?
Yeah, it's a tough place to be for junior explorers right now, and not only right now, but in general, the last couple of years. There's no question that we're all raising money on a necessity basis, reluctantly very often, because of the market and because of our share price. Rollbacks are questionable. I think there's been a lot of analysis done on rollbacks, and that you sometimes get hit just for rolling back. I think the market we're in, we're hoping the market's going to improve. We're going to raise obviously reasonably. Is it going to dilute some more? Potentially, but we're going to try to do it. We do flow through obviously because we put money in the ground, so that limits some of the dilution. The other opportunity would be maybe for a strategic investment from someone to help us along. For example, that could be a consideration. It's tough for us to go out there, and I know people don't want to see more shares out there. But other companies like Australians have done it very well and have been very successful, and they're running way ahead of us. So in their valuations, I'm not saying it's the right model, but the point is, by nature of being junior explorers, this is what we do. We have to go to the market, raise money, and hope that we can put it in the ground and gain more value than what we went and raised. So we believe we're sitting on literally a few gold mines here, and we think by putting more money in the ground, we'll be able to increase the value. So we have to do what we have to do.
Yeah, it's very interesting how the Australians get away with those, hundreds of millions or billions of shares in small companies, but don't need to go there. On this subject, though, I noticed one of the slides in your presentation showed the insider holdings, and the biggest insider holding was you, the CEO. And I'm wondering, did you put your own money into this deal, or is that just a bunch of options they gave you?
No, actually, I would say 90% of my holdings. So I'm at, I think, 1.2% of the company, 2.6 million shares, top of my head. About 90% of that has actually been bought in the open market or directly into a financing, meaning I had to write a check personally to buy those shares because I believe in what we're doing, obviously. About 10%, and I'm going to say that because the first tranche that I bought into the company was when I took over. And what I had is I had some options as a director. I basically exercised the options, but did not sell the shares. I put them in the company. So yes, I had to even pay for those, but they were options. But that was the first little portion. The rest has all been done through open market or financings directly.
Well, I appreciate your straight answer to an obnoxious question there, but I believe in putting my money where my mouth is, and it means a lot to me that you obviously believe the same thing for your company. So we have deliverables are basically exploration results from your two key projects, winter exploration results. So we've got results pending from both key projects, and then we see where we go based on budgets, priorities then for the remainder of the year. Is that right?
That is exactly correct.
Great. Okay, well, those are my questions. Any last words you want to make sure that we share with my viewers?
No, I do want to thank you for having us and being able to pass this on to your viewers. I think Eastmain has been doing some excellent work in the last 2.5 years to turn this company around. Unfortunately, the market has not been there, but I think that is coming, and we think that the value that we are currently creating internally will be unlocked eventually by investors realizing what we've done and how much work we've done and the total value. I think it's exciting because for any investor that is interested in coming back into gold and the junior gold market, to me, these are kind of companies I look for is who's been really advancing their project, creating value, but unrealized. I mean, that's an opportunity for an investor. If anybody wants to come in, there's huge upside ultimately to be had as long as you're patient. We all have to be patient. All my personal gold investments in the last 15 years, some of them I've held on for 2, 3, 5 years, but I've benefited incredibly by being patient. So you get in at the bottom and you sit and wait, and eventually you get rewarded. I think this is a great opportunity.
That's a very interesting remark. It's something I've been different about from my former boss, Doug Casey, and I'm not prone to selling just to for portfolio management reasons or for statistical reasons or rebalancing reasons or whatever. I sell if there's a reason to sell. If the company fails or they run out of money or something like that, that's a good reason to sell. Yeah. But if the premise hasn't changed, if my reason for owning the stock hasn't gone away, I tend to hold, and I'm willing to hold for as long as it takes, as long as they're making progress. So that's an upbeat note to end on. Thank you for your time, and good luck with that exploration.
Thank you very much.